Hello, and thank you for watching this International Financial Reporting for Non-Profit Organisations webcast on narrative reporting. This webcast is part of a series that covers some of the key issues in financial reporting that affect non-profit organisations and that are included in the IFR4NPO Consultation paper. This session begins by looking at what is meant by narrative reporting. Next, we will consider the main financial reporting considerations that NPOs face with narrative reporting. We will then look at how these issues are currently addressed in the existing accounting standards, beginning with the international frameworks, before looking at how some national standard setters have addressed NPO-specific issues. Finally, we will look at the alternative treatments identified in the IFR4NPO Consultation paper and how you can share your voice and respond to the questions raised. There has, for decades, been a recognition that financial statements do not meet all the information needs of users of an organisation's financial information. Stakeholders need additional information that help them with their decision making and to hold an organisation's management to account. So narrative reporting can give details of, for example, an entity's performance and prospects. The importance of this narrative information is as relevant, if not more so, for NPOs, because for many NPOs, the financial statements may not capture some of the most important aspects of an organisation's performance. Narrative reporting can focus more on non-financial information, issues and measures. This type of reporting can bring greater clarity and provide information about sustainability, operating results, employees, impact on the community, importance of voluntary contributions, impact on the environment, resources, risks, relationships, and objectives. And providing information on these areas is essential for demonstrating accountability and stewardship to stakeholders and civil society. Non-financial reporting can also bring greater clarity in areas such as the reporting of remuneration, governance arrangements, and the effectiveness of an NPO in making use of the resources it has received. Disclosure requirements, however, currently vary across jurisdictions depending on local accounting requirements, local regulation, and local legislation. So if a stakeholder is using general purpose financial reports from similar types of NPOs that operate in different jurisdictions, they may not find similar types of information in each report. This can also make it challenging for stakeholders where a single set of general purpose financial reports are used in multiple jurisdictions. For this reason, narrative reporting is proposed to be within the scope of the IFR4NPO guidance. There are a number of financial reporting considerations associated with narrative reporting. These include: should an existing framework be used, and if so, which framework to use? At which level should non-financial reporting proposals be pitched? Does management's perspective provide the most useful information? How much flexibility is allowed? Are there challenges in exercising judgment about which information is presented and how? Potential uncertainty in the information presented, particularly if this is forward-looking, and challenges regarding what to audit and the level of assurance that can be provided to users of financial statements. We will examine each of these challenges in turn. The first financial reporting challenge is around which framework to use. Non-financial reporting has become a growth industry in recent years, and there has been a proliferation of frameworks, codes, standards and guidelines on a wide range of reporting issues. There is guidance in international accounting frameworks, but no specific standards. Many of these new codes and guidelines have been in the broad area of sustainability, and recently there has been an increasing focus on reporting on climate-related issues. An initial challenge, therefore, is to determine which of the multiple frameworks, codes, standards and guidelines is the most appropriate basis on which to develop proposals for narrative reporting by NPOs. The next financial reporting challenge relates to the level at which non-financial reporting proposals should be pitched. Should proposals for non-financial reporting by NPOs be pitched at a framework level, with broad principles and content elements to be included? For example, a requirement for management to provide additional information to supplement and complement the financial statements without dictating what that should be or the form it should take? Or should they be more prescriptive and focus on specific items and measures? For example, should specific ratios be defined, and if so, what should they be? There are also issues related to areas such as fundraising costs and the classification of expenses by function or nature. Here there is a question as to whether disclosures relating to such costs and their categorization could form part of the notes to the financial statements or be part of non-financial reporting. There is also a challenge in providing information from a management perspective. Narrative reporting is usually prepared from the perspective of the management of an organisation, hence its description using terms such as management commentary. Narrative reporting provides an opportunity for management to provide to stakeholders its perspective of the organisation's performance, position and progress. It can, though, be a challenge for management to effectively include information that is useful and effective in improving understanding of the nature of the organisation's business, management's objectives and its strategies for meeting those objectives, the organisation's most significant resources, risks and relationships, the results of operations and future prospects. This means including information that both complements and supplements the financial statements, as well as forward-looking information, and the key performance measures and indicators that management uses to evaluate the organisation's performance against stated objectives. Narrative reporting also raises the challenge of how much flexibility organisations should be allowed. The general principles and content elements of narrative reporting could be applicable to all organisations, although the appropriate level of detail in reporting could differ depending on factors such as an organisation's size, complexity, and resources. The flexibility of a principles-based approach is relevant to consider given diversity of NPOs. Without flexibility, it may be challenging to find an approach that meets the needs of all NPOs. It might also be helpful in the context of the calls that have been made for NPO narrative reporting to address such specific matters as the remuneration of key management personnel and related party disclosures, and specific legal requirements in local jurisdictions, for example, could add to or be inconsistent with disclosures arising from a framework type approach. A framework approach based on principles will demand more judgment from management than a more prescriptive approach. So whilst the flexibility in a principles-based approach allows a solution better fitted to each NPO, it requires those preparing the information to decide what to include based on their interpretation of the principles. There can be a risk that, faced with interpretive uncertainty, management will err on the side of caution and disclose large quantities of data, rather than exercising the judgment required to present only the relevant information required to meet stakeholders' needs. This may generate confusion rather than transparency if reports become overly complex. Compared to the financial statement information, there may also be more uncertainty in the information provided by narrative reporting. In the provision of forward-looking information, for example, the values presented will be estimates or projections, rather than historic information that could be audited. It could therefore be appropriate for management to explain any material assumptions in the preparation and disclosure of such information so that users can understand the basis of future prospects and improve their understanding. There will also be challenges if non-financial measures and indicators are included without explanation. Management will need to explain how these measures and indicators are defined and calculated so that users can see why they are important and be able to assess their effectiveness in measuring performance. And there will likely be a challenge in management reporting in a balanced way, dealing even-handedly with both good and bad aspects of the performance, progress, and prospects of the organisation. The audit of non-financial information provides another final challenge. Much of the narrative reporting that currently takes place, both at international and national level, is within an organisation's annual report, but outside of the financial statements. Disclosures that are part of the financial statements are usually subject to audit, with defined standards and procedures to help auditors form their opinions. But material that accompanies the financial statements is subject to a more limited assurance review. Assurance activity aims to identify any material inconsistencies between the information presented and the information in the financial statements and the auditor's knowledge obtained in the audit. But this does not amount to the same level of assurance as provided to the information in the financial statements. Having examined the financial reporting challenges that exist with narrative reporting, we can now look at what guidance is available in international and jurisdictional level financial reporting frameworks. International level guidance comprises IFRS standards. Now, these standards do not address the issue of narrative reporting within the standards themselves, but the International Accounting Standards Board, ISB, that issues IFRSs, has issued a non-mandatory practice statement management commentary. This was issued in 2010 and provides guidance on the issue. It notes that management commentary should provide users of financial statements with integrated information providing a context for the related financial statements. It also provides management with an opportunity to explain its objectives and its strategies for achieving those objectives. The practice statement makes clear that management commentary should be consistent with the following principles: provide management's view of the entity's performance, position, and progress, supplement and complement information presented in the financial statements. The ISB is in the process of reviewing and revising the practice statement with an exposure draft scheduled for release during the first half of 2021. The IFRS for SME standard. The IFRS for SME standard doesn't specifically include narrative reporting, although the non-mandatory practice statement issued by the ISB is available for use. And IPSAS. IPSAS do not specifically address this issue within the standards themselves either. The International Public Sector Accounting Standards Board, IPSASB, has, however, issued non-mandatory material in the form of Recommended Practice Guidelines, RPGs. RPG 2, Financial Statement Discussion and Analysis, covers some, but not all, the issues covered in the ISB's practice statement, focusing on an explanation of the significant items, transactions, and events presented in an entity's financial statements and the factors that influence them. RPG 3, Reporting Service Performance Information, focuses more on how an entity should report on its effectiveness, efficiency, inputs, outputs, and outcomes, together with its performance indicators and service performance objectives. Both the IFRS practice statement and IPSAS RPGs adopt a framework approach based on principles. This gives entities flexibility on how to apply them relevant to their own circumstances, rather than setting out very specific individual recommendations. The ISB and IPSASB have standards on some areas, such as related party disclosures, which are often identified as being of interest to stakeholders. These focus on the disclosure in the notes of the financial statements, the remuneration of key management personnel, and related party disclosures. The IFRS for SME standard requires related party disclosures consistent with IFRS standards. Outside of the IASB and IPSASB guidance, one other major relevant development in recent years has been the growth of integrated reporting, IR. In particular, the International Integrated Reporting Framework developed by the International Integrated Reporting Council. The IIRC framework provides a non-mandatory, principles-based reference for organisations wishing to adopt integrated reporting. The primary purpose of an integrated report is to explain to providers of financial capital, that is investors, and other stakeholders, how an organisation creates value over time. An integrated report aims to provide insight about the resources and relationships used and affected by an organisation. These are referred to as capitals in the framework and cover financial, manufactured, intellectual, human, social relationship, and natural capital. The framework approach enables an organisation to set out its report in its own way, rather than adopt a checklist approach. While developed for the for-profit sector, IR could be useful and relevant for NPOs to demonstrate how they optimise their use of available resources and report on operations to their stakeholders. At a national level, there are differences between jurisdictions in the requirements and guidance for narrative reporting by NPOs. One jurisdiction provides guidance on narrative reporting within its overall requirements for accounting and reporting by NPOs. A statement of recommended practice is used to set out not only requirements for the preparation of financial statements, but also the content of the annual report prepared by the management body. It provides for differential narrative reporting requirements, giving the greater degree of accountability to civil society and stewardship reporting required of larger NPOs. Another jurisdiction has a specific standard that sets out requirements for its public benefit entities, NPOs, reporting of service performance information. The standard uses appropriate elements of the recommendations in IFSASB's Recommended Practice Guide on Service Reporting in the jurisdictional context and contains differential reporting requirements. The standard also establishes principles and high-level requirements for the reporting of service performance information rather than specifying detailed reporting requirements. Finally, a number of other jurisdictions, whilst having no general guidance covering narrative reporting by NPOs as part of their annual reports, do have specific requirements to lodge annual information with their relevant regulatory body. However, such annual returns are generally focused on meeting the information needs of a regulatory body rather than forming part of general purpose financial reporting. Given the importance of narrative reporting in the NPO context, and the fact that there is existing guidance at both international and jurisdictional level, it could be beneficial to incorporate the development of global narrative reporting guidance as part of the IFR4NPO initiative. 3 alternative options are proposed in the consultation paper. Alternative 1 proposes the continued use of existing guidance relevant in each jurisdiction. This would be the default option if feedback from respondents to this consultation paper proposes that narrative reporting is not included within the scope of the project. This would mean that individual jurisdictions and/or organisations would continue to develop their own policies and guidance on narrative reporting and mean that some jurisdictions would continue to have no guidance on narrative reporting. Alternative 2 proposes additional guidance for NPOs consistent with the recommendations of the ISB and IFSASB, but with specific NPO examples. In this alternative, applying the principles outlined in the additional guidance could be required for all general purpose financial reports. Alternative 3 is more ambitious and proposes that NPO guidance moves ahead of current international accounting guidance with a move to the International Integrated Reporting Council framework. This could be tailored for NPOs and enable a comprehensive view of an organisation's resources and relationships and how it has used these and plans to use them over time. The needs of NPO stakeholder groups would be the focus of any tailoring that takes place. This is your opportunity to shape the future by sharing your voice. Amongst a range of issues covered in the consultation paper, We want your views on narrative reporting, including how narrative reporting has been described, the alternative options that have been put forward, and whether narrative reporting should be set at the level of a framework and principles or should include more specific reporting requirements or recommendations. Please respond to the consultation paper. The consultation period ends on the 24th of September 2021. Shape the future, share your voice, submit your response.